Let's get back to earnings and let's keep our focus here on the Giants. Kevin Green looking at Netflix this week. All right, this has got to be an important quarter for them, Kevin, because after the big run up off the bottom, chart kind of stalled out in the middle of that long-term range.
Yeah, we are seeing potential back and fill when you're looking at this gap up from May of this year. So it is going to be a very important report. We actually are going to have that on Wednesday after the market close. And we are actually seeing UBS lowering their price target on the stock to $500, and that's down from $525. But they also do maintain their buy rating. They do believe that the company is going to be able to meet the street's expectations when it comes to top line and bottom line growth. And they do expect accelerating operating income for Q3 as well, and also hearing some optimistic commentary coming from their executives for Q4 here. Now, the street is actually expecting revenue to increase by about 7.6% on a year-over-year basis, and when you're looking at the downside growth, street's looking for growth at around 11.9% on a year-over-year basis. I think the biggest hurdle right now when it comes to Netflix is just being able to really detail their strategy moving forward. We've seen a lot of growth when it comes to some of the other markets as far as the Asia-Pacific markets and in the Middle Eastern markets as well. That has actually been a really surprising area to see a lot of this growth, but now they're going to have to be able to capitalize on that because we are seeing a little bit of a plateau when it comes to the North American market and trying to increase subscribers. But we know that the North American market in itself is the most profitable. So I think that's going to be the biggest case. We're also going to get a little bit of an update on their rollout when it comes to games. They did roll out a couple of games throughout the quarter. Let's see if that's going to actually increase user engagement, if they're seeing any type of follow through on that end, or if it is potentially falling flat on its face. I think that's going to be seen here. So overall, yes, we are going to have these numbers once they do roll out here. Hopefully you are able to see a little bit of an upside surprise, have the stock recover some of its gains that we saw at the earlier part of this year, and hopefully not filling that gap to the downside that we saw in May.
Okay. So this is a big test of some of their new measures they've taken to keep bottom line profit not only intact, but trying to grow a little bit, right? I mean, Netflix hasn't been like a top line story for a while. It's very much become a bottom line story, a no sharing of accounts. Make sure we get money from everyone and as much as possible, right? I mean, it's not like big growth expectations are necessarily the standard here anymore.
I don't believe so. I mean, they've been able to prove themselves as far as having pricing power over the last year and a half. That's what has been really driving that top line growth here. But I think the question now, Oliver, is how are they going to be able to kind of implement that same strategy that they're utilizing here in the United States and in Canada and apply that for some of the other markets that they've seen just rapid growth when it comes to the new users? Because if they are actually able to expand or increase those prices, even by a little bit, that immediately is going to be accretive on their top line income statement here. And I'm not sure if they are prepared to maybe increase those prices for those particular markets, or if it is about time. And maybe they try to test to see the retention strength that they have with some of these newer consumers. They have been able to broaden out their portfolio when it comes to the type of content that they are able to deliver, not only being able to hit on all measures when it comes to some of these markets. Like, you know, we've seen the Squid Games a couple of years ago, very popular, but I don't think they thought it was going to be as popular here in North America as it was. So I think they have the ability to continue to grow. I think it's just utilizing that pricing power and some of the other emerging segments that really have been untapped over the last couple of years.
Going to be particularly appealing to get some fresh Korean content if the writers here are still on strike. As far as the labor element goes in America, do you expect them to comment on that?
Yeah, definitely. They're going to probably have to adjust their guidance because they have moved their guidance to the downside as far as the expenses because of these strikes. But if they do expect to have these strikes resolved here across the board in the next quarter, then they're going to have to probably adjust their guidance moving forward. And I'm not sure if the street is going to be really factoring that in at this point in time because it's been a very volatile situation. But the street actually did compliment it when it did cut its expenses because of these writer strikes. So I'm not sure if the opposite's going to also impact them to the downside here.
Okay. All right. Shares okay, hanging in there about 357 going into earnings. Obviously a rough 3 weeks, really, with the slide down from 440 since the month of September began. So it's really been month and a half almost, that this thing's pretty much gone straight down. But at least perhaps that sets up a bid. If you look at the 52-week chart, you can take that line and connect the lows. It does still look like it's uptrending, and that this would basically be right on that uptrend line. So hopefully for bulls, they show some stability in that earnings potential that they've really tried to define for themselves with the crackdown on the account sharing and some of the margin metrics. So good report, Kevin, and it should be a fun one coming up here.